Hello, viewers. You are welcome again to my YouTube channel. All right. If you are new, as a normal norm, you need to subscribe. All right. Once you subscribe, what it does is that it alerts you anytime I drop a new video, and when you activate, there's a bell. You know, after you must have subscribed, there's a bell you need to activate. All right, that bell, it's a signal that any time I release a new video, you will even be the first person to be notified. So that being said, today I have some tools that I want us to add to our trading toolbox. All right. In as much as we know how to use Fib tool, um, we also know I should, also teach us about other tools, even if maybe you don't want to use them, but it's also good for you to know that all those things are in existence. All right. And they are also profitable. Okay, so when you have variety of tools, you can decide to apply any one at any given time. So that being said, today I'm going to be dissecting a tool called the RSI, all right, and the MACD. All right, we have a tool called RSI. All right, so when we say RSI simply means relative strength index, okay? Relative strength index, all right? Is a momentum oscillator used in forex trading to measure the speed and change of price movement. So what RSI does is that it measure the speed and change of price movement. In my other video, I did measure it, but I didn't really, dive deeper. And somebody said I should, you know, explain how it works and when it needs to be used. So I just took that mail. I said, okay, let me just act upon it fast, okay, because there are so many things, that somebody needs to do. But as a trader, you need to equip yourself with varieties of tools. All right. So at any point, anyone you like, you can just pull it up and use it. All right. And it's also good for confluences, all right? When after you must have, plot your Fibonacci retracement tool, you can just pull out your RSI, MACD, all those things, use them as a confluence. By so doing, you'll be very, very sure of your directional bias. So it's very, very key and important. So the relative strength index measures the speed and change of price movement. It measures the speed and change of price movement. All right. And again, it helps we traders to identify when market is overbought and when the market is oversold. All right. The RSI help us to denote anytime the market is overbought or anytime the market is oversold. All right. If there are too many buyers, price will continue to go off, skyrocket. What RSI does, it will help us to know, okay, at this point, the market is overbought. Or at this point, when it's bearish, it will let us know that the market is oversold. So what we'll now be expecting based on our knowledge of RSI will now look, okay, this market is overbought and is oversold. Rather, whichever condition at that moment, we will now be preparing for a reversal. So it's um, very key and important tool to always use. All right. Another thing is the key features of RSI. All right. We have the scale values. The scale values ranges from 0 to 100. All right, we should know all those things. So it does not mean that we should be doing mathematics anytime we want to apply this to no. This is automatic because the developer has already worked everything out for us. It's for just for us to plot it on our chart. We just know that okay, at this point the market is oversold, at this point the market is overbought, which I'm going to be teaching us as we progress. Now, how do we now identify or know when there is oversold and overbought level? How do we identify the levels of overbought and oversold? Now, in RSI, we have 70. Remember, I told us the scale value ranges from 0 to 100. So anything above 70, it indicates that the market is overbought. Once you plot your RSI, all right, once you see that the market is above, the RSI is above, is showing, which I'm going to be showing us right now. Once you see that it's above 70, you just know that the market is overbought. All right. So at this point, I'm going to be showing us so that we'll just flow with it. You just come to this indicator metrics and strategies, you type RSI. So it is already developed and is there. You can see it that a star, that means it's among the tools that I use. Okay. At this point, now that is just how you are going to launch it. Look at what happened, guys. You see that this point, look at this point. You see that, one moment, you see this point, you see that from here, one moment, you see this is, I want us to see this thing here. Look at this thing. It's 69.15. All right, this is 69.15. Can you see it, guys? It's telling us that any moment from now, we are gradually moving into oversold condition. All right, when you look at it now, it's above, it's already above. This is 69.16. And if you look at this very one here, it's already pointing oversold because it's 76.31. The market now is oversold. You can see that it's above the band. Look at the upper bound and the lower bound. All right. Look at this guy. It's already out of it. So you see, it's 76.79. Is indirectly telling us at this point the market is overbought. All right. Before long, you will see a massive reversal. Once price turn from here, you see a massive drop. Now, if you look at, let me quickly show you guys something. All right. If you look at this point here, where, let me show you guys some. Look at it here. Look at this point here. You see, at this point, this is what we call overbought. All right. What happened? When overbought happens, when overbought happened, what did you see? You see a massive a massive drop like this. You see? A massive drop. All right? You see? This is a massive drop because the market is already overbought. So all you need to do is just launch it and you just see. Once you see that this thing is above 70, you know that the market is overbought. And what you should be expecting is a massive drop. All right? You should be expecting a massive drop. Look at it. You see? You should be expecting a massive drop. So it's a very simple tool to really use. And another thing is that anytime is above, you see that anytime is above is below 30, I beg your pardon. Anytime is below 30, you know that you just know that the market is oversold. All right. Anytime it's below 30, you know that the market is oversold. All right. Once you see that the market is the RSI is below 30, you know that. Look at it here, guys. Look at it. It's very simple for us to really understand. Look at it. This thing, you see, it was below it, below 30. All right. Anything, because look at it, it's already 39. Anything, look at it. Once it comes to this point now, look at it. It was 14.21. It was below. What happened? The market triggers and it starts rallying up. So that is how it is. All you need to do is for you to launch the ROSI. As simple as that. So then how are you now going to use it? All right, is that is a very simple thing to do. What you need to do is to first of all identify a trend, if it is an uptrend or a downtrend. All right, you just stay there and look at it, identify a trend, then you just plot your RSI, activate it, bring it out, all right, just the way I showed us now. You bring it out. Once you have done that, you just bring it out any time that the RSI is above 50, all right, you know that an uptrend is about to happen. And anytime the RSI is below 50, you know that downtrend is about to happen. That and when anything that is above 50, you just know that you are supposed to be buying. If it is below 50, you know that you are supposed to be selling. So it's a very good tool, guys. Then another thing is for you to spot a reversal. Look for a RSI crossing. Once there is an RSI crossing above 70 or below 30, that is a potential reversal. All right. Another thing is the divergence. When the movement in the opposite direction of the RSI, it can signal a potential reversal. So anytime you see that the RSI is going to is pointing at one side and the market is pointing, let's say for example, the RSI is telling you that you are supposed to be selling and the price action is telling you that you are supposed to be buying. That is what we call divergence. All right, that is what we call divergence. So when the price moves in the opposite direction of the RSI, that signals a potential reversal. That is what we call divergence, guys. It's very, very easy to understand. So another tool that I want us to add to our toolbox, all right, our trading toolbox is what we call MACD. All right, MACD simply means the moving average convergence divergence. All right, moving average convergence divergence, that is MACD, is also a momentum indicator used in forex trading to identify changes in the strength, all right, direction, momentum, and the durability of a trend. For you to know the duration of a trend, how long is it going to last, then you need to apply that tool called MACD. It's very, very effective, and it also helps to know the strength. How powerful is the momentum? All right, you just be seeing it. All you need to do, like I've showed us earlier, you come to this very point, indicators, matrix, and strategy. You just type MACD. All right, moving average convergence divergence. You can see a star. That is what I use. All right, you see, look at it here. Look at it. This is MACD. All right. Once you see all these histogram, all right, I'll get to that in a moment. All right. So, like I said, MACD, all right, help us to identify changes in the strength, duration, direction, momentum, and duration. All right. What are the key components? Because this thing you see that has a component. All right, you just see it functioning, but it has a component. The key components is what we call the MACD line, the signal line, then the histogram. All right, the MACD line, this is the MACD line, this is the histogram, and this is the signal line and the MACD line. So it's very, very simple to understand. The MACD line, the histogram, and the signal line. All right. So for you to really know this thing, just right click on it, go to settings, and you will see it. You can use any color to represent it. The MACD line is represented with blue. The signal line is represented with this color here. All right. You can call it red, you can call it orange, whatever color you feel like you want to call it. All right. So the histogram here you see is denoted with this green color. All right, so that is how to check. You can decide to use any color of your choice. So what does MACD line does? MACD line, it subtracts 26-day exponential moving average from the 12-day EMA. I'm not saying you should be doing all this mathematics. The guy, the developer has already done everything. All you need to do is just to plot it, just for you to know how it functions. All right, that is why I'm just teaching us all these ones. So it subtract 26 days from the exponential moving average, that is EAM, from the 12-day exponential moving average. All right, the signal line 9-day EMM of the MACD line, which act as a trigger for buy and sell signal. All right, then the histogram, this represents the difference between the MACD line and the signal line. How to use the crossover. All right, we have the bullish signal and we have the bearish signal. When the MACD line crosses above the signal line, it indicates potential uptrend momentum. Then the bearish signal, when the MACD crosses below the signal line, it indicates potential downtrend momentum. Guys, so, and we also have the divergence and the bearish divergence. Anytime you see that the price is moving in a certain direction and the other one is coming in another direction, it's going to the opposite direction. That is what we want to call divergence. Thank you, guys.